lot of times it's not just optional, it's required, it's based on the legal requirement, and sometimes it's based on the cost benefits. But let's talk about the basics. When the person is considered employees and when the person considered contractors. Let's talk about the control. And that's the main part, control and independence. When you're employee, your employer, when you're an employee, the employer controls how, when, and where the work is done. The employer set the schedule, employer provide the tools, equipment, and then manage the workflows. Then employees just have to follow the procedures and policies of an employer. When you're a contractor, you work independently, so your hours, your schedule is all based on your preference, and then you provide your own tools and equipment. And the only thing that employer can manage is the outcome. The method, everything is going to be done by the contractors. So to make it very simple, the employee has to laugh to his boss jokes, but the contractors doesn't need to. Understanding the hiring employees versus hiring a contractor is very key, because it's going to come up with a lot of issues if you don't follow the regulation and rules. It's from the tax perspective and from the legal perspective. Let's break it down. Let's say about tax withholding and reporting. When you hire employees, employer is responsible for withholding taxes, Medicare tax, Social Security taxes, unemployment insurance, and federal withholding, state withholding. All of these is the employer responsible. When you hire a contractor, you're not responsible for any of these. Well, as an employer, you just pay the contractors. The contractor is responsible for paying taxes, paying Medicare tax, medical tax, and then file their own taxes on any withholdings. So the second part is the employer needs to pay payroll taxes, just as employer portion. The one I talked about, it was employee portion. Employer needs to withhold taxes on employee, but at the same time, employer needs to pay payroll taxes. What are the payroll taxes? Like you have to pay 6.2% Social Security tax. It's come up. It has a wage, so if your wage is up to some point each year, it's gonna stop there. Medicare taxes, that doesn't have a cap, so it's gonna pay. You pay 1.45% Medicare tax. Insurance, unemployment insurance, and worker comps. That's some of the other requirements that the employer needs to withhold taxes and pay those taxes. So if you don't do that, and if you misclassify employees as their contractors, and then you get audited, and then IRS determine that those people were employees, you have to pay all those payroll taxes for all of those years. Let's say for 2022, then you got audited, 5 of your contractors needs to be employees. Then the IRS comes, okay, you need to pay payroll taxes for all 3-4 years, and and you have to pay penalties and interest. So we're gonna get into the details when the IRS considered as employees, when considered to be a contractors. It's gonna be a common law test, and we're gonna talk about it more in details. Then the third problem would be if the employees misclassified as a contractor, they're gonna come maybe sue you because they missed benefits. Maybe they don't have unpaid overtime or wages. So that's from the legal standpoint, they might come after you and sue you. And then same thing, it's gonna be are you gonna be subject to the IRS and state tax audits, and then that's what you want to avoid. So some of the most common mistakes that employer make is, let's break it down. For example, the first is just focusing on the contracts. For example, is just you tell the person, okay, you are contractors, we have a contract, but that's it. So let's give you an example. Let's say you start dating someone, and then you tell everyone, oh, we are just dating casually. There is nothing serious. You tell everyone, everybody knows about it. In 6 months, people around you see you together and have a kids, or you're going on Hawaii for a vacation and with your parents, everybody. Even you told everyone it's casual, the reality is something else. You have kids, you're having a family, the family visit each other, so it's not the same thing. It's the same thing with the contractor. You just saying just you're a contractor, but in reality, you don't have that relationship with that person, which means from the IRS standpoint, this person is employees. The second thing is controlling how the work is performed. Let's say you dictate still say how the work is needs to perform, when and where it needs to be done. The employee needs to follow the procedures and rules. That's the controlling. That means your employer and then that person is your employees. They have to follow your rules. Because contractors should be free. The outcome should be based on the employer needs, but the contractors are free. So the controlling is the second part, that the employer make a mistake and they don't follow the rules. The third one is when the employer provide equipment and tools, like, okay, these are my laptop, these are the software you use, and then these are the training you need to do these things. All of these things break the rules that this person is a contractor. Contractors needs to bring their own equipment, and they are responsible for own training, and the only thing again you need to do is just the outcome. Like for example, a graphic designer using your own computer is going to be contractor, and if using your computer, it's going to be considered your employees. So another mistake is you ask the contractors to not working for any of the competitors. So that means you have a request that just work for them. So you're going to be in control. So that's going to be another thing that break the rules. You don't have any vendor contractors. You cannot force them to do anything for not working for other people, and or even for your competitors. And then again, setting something else again is setting a long-term engagement. Same with the dating. Let's say you agreed with the dating with the other person casually, and then you start planning your trip for next year. So that's against the agreement you had. So having a specific project, specific timeline, having a long-term relationship, anything that shows that relationship is going to break the rules that this person is your contractor. The other mistake is paying like employees. Means, okay, I will pay you every 2 weeks at this time on Fridays. I pay you monthly. I pay you based on these hours. So it's when it happens as regular payments like employees, that's going to be another mistake that you make. And that person is not going to be anymore employees. That person is going to be considered contractors. Reimburse your contractor. That because when, for example, if the contractors travel, you're not responsible for paying their expenses. It's as a reimbursement. You can talk about it in the fixed fee and the fees that they're gonna get based on hourly, but not calling it as a reimbursement because again, that person is not employees. Providing benefits, retirement, health benefits, all of these is gonna be under employees versus employer relationship and not the contractors. And one of the other mistakes that everybody makes is the federal and the state requirements are completely different. Sometimes it's different. For example, California has more restricted regulations than federal. So it doesn't mean if you're okay with the federal, you're still okay with the state. Like California came up with more restricted requirements, and then you have to make sure you are in compliance with both federal and state regarding the federal and California. So, for example, let's say per California rules, you cannot do the same thing that your contractor do, or your contractor cannot do the same thing that you do. For example, I'm an accountant. I'm a great accountant, but I cannot hire another accountant and call them contractors, even though per all of the IRS rules, I'm not in control. I don't set the schedule. I don't provide any equipment. I don't pay regularly. It's per IRS regulations. Okay, this person is my contractor. But if we let's go with the California rules, we cannot be in the same. It, the contractor cannot do the same thing that I do. Let's say I'm an accountant. That I am an accountant, but and it's a tax season. I'm swamped. I really need somebody seasonal. Just during the tax season, I don't need after tax season. And then I hire a person temporary. Even though it's temporary, I don't set the schedule. That person can work from home with their own computer. Per California rule, I cannot hire that person as a contractor. So these are the common mistakes that the employer makes when they hire employees versus contractors. Uh, Having a control, having it just relying on the contracts, not considering the federal and tax each state's requirement, providing tools and equipment. So for a tax standpoint, again, the employer has obligations. When you're an employee, you have to withhold taxes, Medicare taxes, Social Security taxes, unemployment insurance, and then withhold the federal and state taxes per W-4, and then I'll submit to the governments. So you're the responsible for collecting those taxes, withhold those taxes, and pay to the government. As a contractor, you don't have any obligation of those taxes. The only thing you need to do, if you pay a contractor over $600 in the year, you just only at the end of the year, by January 31st, you need to issue a 1099. That's the only obligation you have. Paying those taxes basically cause some advantage and disadvantage. Let's say, okay, payroll taxes is not a low amount, could be 15% withholding from employee and then pay the same, matching the same amount, so it's come up with a 15% tax you have to consider. So paying payroll taxes is a disadvantage when you're hiring employees versus contractors. Paying, if you have more than 50 employees, you have to provide healthcare insurance, so that's going to be additional cost that you don't have that cost when you pay contractors. The tax advantage is, okay, you pay those taxes and then you can write them off. You pay insurance, you can write them off. So there are some advantage and disadvantage. Overall, you have to pay payroll taxes. That's the disadvantage of hiring employees, and that all of those obligations you have. And thanks for listening to our podcast today, that we went over all the requirements for hiring employees versus hiring a contractor. There are still a lot of details in each state. There are different requirements, so you have to case by case. You need to look into it and consider all of those requirements. And if you have any questions, please reach to us, leave a message, and then email us, and then we are here to help you if you have any questions for hiring employees versus hiring a contractor. Please like, subscribe, and keep supporting our podcast.